Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here on Friday, September 17th, 2021, and I'm joined by my wonderful co-host, Jordan Youl with StoneCastle Investment Management. Thank you for joining me, Jordan.
Yeah, thanks for having me. It's good to be back.
Now, for any of our regular followers, you will know that Jordan is joining me because today is a special day. It is Quadruple Witching Day, which we will get into. We're going to start having tests on what people have to learn here. So pay attention. Okay, we're going to break down a lot this week, so we're going to jump right into it. We're going to talk about market breadth, which coincides with seasonality. There's a bunch of stuff happening in the market that you're going to break down for us that we all need to consider. We're going to talk about Quadruple Witching Day. I'm going to once again tell you what that is and what that means for the markets. We're also going to talk about small and mid cap, which are showing signs of strength, which is a good thing. We're going to talk about Bitcoin Golden Cross, which to me sounds like a Lord of the Rings movie, but it actually is not. There's more to it there. We'll tell you what that is and what that means for Bitcoin. And then, of course, we'll get into some CSE Issuer news. Let's start by talking about the market breadth, which coincides with seasonality. First of all, we're going to start off. There was some down trading days. What happened this week?
Yeah, this week we've had, 4 to 5 days this week have been negative in reference to the S&P 500. But this is normal, especially on Quadruple Witching Day. Typically the week leading into this day, we see an uptick in market volatility and some down days. But given the fact that we are in a seasonality period where September historically is a weak month in the calendar year, it's not too surprising to see some distribution this week in the markets.
Right. And then you talk about, or we're going to talk about market breadth, which it kind of continues to weaken. What's happening?
Yeah, that's been a concern over the last number of months. The number of issuers that have been participating as the markets hit all-time high is pretty slim and narrow. There's only been a few sectors in particular that have been really driving and leading the markets as we hit all-time highs. So really what's been a concern or an issue is a lack of issuers participating. And that kind of coincides with weakness in the small to mid caps on a relative basis. We continue to be range bound in that sector or in that segment of the market. So we need to see some follow through as the markets hit all-time highs. But given the fact that only about 50% of the issuers in the S&P are trading above their 50-day moving average, that's not very strong.
How do retail investors feel about all this?
Well, retail investors in particular, their sentiment is very pessimistic right now. So we actually have a chart of the Association of Individual Investors. It's a poll that comes out each week. And the week over week change has declined by 42%. So from a contrarian standpoint, this is actually positive and bullish and constructive for the equity markets. Typically, individual investors, their timing is always wrong. What we want to pay attention to is the institutional or the smart money. And right now they're around 85% invested in equities. So that's encouraging. But we've had more calls this week than normal from individual investors asking about the market. So from a contrarian standpoint and looking at it from a historical perspective, this is a good opportunity to look at putting cash to work.
Absolutely. And I talked about that last week with Bruce. This is potentially a good time of the year to make sure that you have some cash in your investment account to be able to enjoy some of the opportunities that could be out there. You were also going to tell us a little bit about sector rotation. What's going on?
Yeah, the narrative or theme really hasn't changed too much. Case in point, this year, it's been a little bit of a barbell approach. We've seen leadership in the defensives like staples, telcos, and utilities, and also technology and a few other offensive type sectors. Whereas, last year off the March low, the markets made a remarkable recovery, but it was predominantly driven by the small cap, mid cap, cyclicals, offensive sectors. That peaked in February, March of this year. And ever since then, it's been a little bit of a mixed bag. So this quarter in particular, in Q3, utilities in our models have been one of the strongest, but also technology as well. So we are starting to see a little bit of a mixed bag in terms of sector leadership. But what's really changed week over week is improvement in energy. So the energy sector in particular has had a very challenging Q3. But this week it is one of the top performing sectors on a comparative basis. And furthermore, energy actually does very well in Q4. So, to your point, from a seasonality perspective, it's good to have some cash to put to work as we capitalize on some opportunities and some rotation into other sectors heading into the next quarter.
Absolutely. Well, definitely something to think about. Okay, we're going to get into quadruple witching. It just happened that you happen to join me every time on a quadruple witching day. So we've just enacted that as, law at Market Recap that you join me on this day. I'm going to remind everyone what this means. Quadruple witching day is the simultaneous expiration of individual stock options, stock index options, stock index futures, and single stock futures. So this all happens on one day. Typically, people know that this is coming and the market reacts before it actually happens. So what led up to this and what are we seeing?
Yeah, exactly. As you mentioned, leading up to this day, we typically see some significant distribution in the markets, and obviously that's case in point this week. But if you're a long-term investor, historically, this is a great opportunity given the fact that the primary trend of the markets are still very positive. You have to remember that despite an uptick in volatility and being down a few percent off the recent peaks, the underlying primary trend is still positive. So if you're a longer-term investor, this is definitely timely to capitalize on some short-term weakness. But this day specifically, what we experience is significant upside in volume. And given the fact that it is September, from a seasonality perspective, it is typically weak. We might see an uptick in volatility going into the close as well. So that's something that we're watching very closely.
Interesting. Well, we'll watch and see how it plays out next week. I know there's lots next week to think about, and we're going to talk about that at the end. Okay, we're going to talk about a Bitcoin Golden Cross. So I just learned myself what this is today. You and I had a good chat this morning. Oh, no, sorry. We're not going there yet. We're going to talk about small and mid cap, which show a sign of strength. Excuse me. Let's talk about that.
Sure. Yeah, absolutely. As I mentioned earlier, the small mid caps in particular had a really good first quarter this year that carried forward from their strong year in 2020. But ever since then, it's been predominantly lagging on a comparative basis to the large caps. So we do have a chart. And effectively what it is it's a ratio of the large caps compared to the mid caps. And then the chart below is the large caps compared to the small caps. And it's an underlying momentum ratio. And the takeaway here is that the momentum oscillator turned negative in favor of the mid caps. So what that means is on a relative basis, the mid caps are exhibiting signs of improving relative strength to the large caps. And the small caps haven't crossed negative yet, but we're close, right? So as equity investors, we want the small to mid caps to participate as the markets hit all-time highs, and that would coincide with, an improving risk environment from an investor perspective. Because right now we're still mixed and we're in a barbell, market environment effectively. So for us to transition and rotate back into a risk-on market, we want to see that follow through in the small to mid caps.
Can you explain to us what a dumbbell market looks like or what that means?
Yeah, it means that investors want exposure to an asset class, like maybe equities in particular, but they're only doing so with like maybe one toe or 1 foot in the water. So as I mentioned earlier, investors want upside in, technology, but utilities, staples, and telcos are attractive for investors as well. So they want a little bit of exposure, but they've been going up market cap and focusing a little bit more towards lower beta or lower volatility equities as opposed to the higher torque names.
Super interesting. Okay, now we're going to get into the Bitcoin Golden Cross. Okay, so the Bitcoin Golden Cross, I'm going to try and explain what I've discovered this morning. Then you're going to tell us what we're seeing happen. So it's a pretty rare occurrence. It's closely tracked pattern. A lot of people pay attention to this. That generally occurs when an asset is on the upswing. And what's happening now is, I'll try and break this down, it's a momentum indicator that is defined at the point which a 50-day moving average crosses above the 200-day moving average. Explain to us what that means.
Yeah, correct. So the time period, like 50-day is 50 time periods, whether it's daily, weekly, or monthly. And if that close or that period day over a trailing 50-day simple moving average is rising, that means the slope and the underlying momentum and trend is accelerating and turning, or at least moving in a positive direction. So the 50-day and the 200-day is widely used and followed by a lot of investors. It's very common. It doesn't happen very often. It typically lags, but it also provides confirmation of the trend. So in this case with Bitcoin, yesterday it did have that 50 crossing above the 200-day, which is defined as the golden cross. So historically, that's very bullish and constructive. Now, the last time this happened was in May of 2020. So, it doesn't happen very often, but at that time, Bitcoin was around $9,000 at that time. So it's happened 3 or 4 times in the last number of years with this ratio in particular between Bitcoin and the US dollar. And like I said, it did happen yesterday. So that's something that we're going to watch and monitor closely moving forward. But nonetheless, it's going to create an interest again, for the underlying commodity.
Absolutely. Okay, let's dive into some CSE Issuer news. So this week, we're going to talk about a new issuer that joined the CSE family. It is Billy Goat Brands. This is an investment issuer. So they started trading yesterday. Congratulations. Welcome, everybody from Billy Goat Brands. This investment issuer I thought was super interesting. They commenced trading yesterday, and they are an incubator, and they want to focus on ESG. They also want to focus on the blue economy, plant-based protein, and functional food industries. I had to look this up. What is the blue economy? And I thought this was really interesting. It's an emerging concept which encourages better stewardship of our oceans and blue resources. It's similar to the green economy in model and aims for improvement of human well-being and social equity while significantly reducing environmental risks. This is so neat to start to see this stuff really start to come to the market, especially the junior markets and small cap space. It's an investment opportunity for investors to be able to, you can invest in Billy Goat, but you get the opportunity of participating in a bunch of different things happening, and the management team will kind of, allude to that. They just completed they were the lead financing on an investment. I believe it's called Sophie's Kitchen. Hopefully I remember that correctly. And that was big financing there. What do you think of this ESG space? I mean, it's kind of blowing up, don't you think?
Yeah, the trend is definitely picking up pace for sure, obviously with climate change and whatnot. But we've been seeing this theme or narrative playing out over the last number of years, right? There's a lot of institution fund companies, institutional investors that are modeling out their companies and scoring how, their product lineups or the companies that they invest in, where they rank from an ESG perspective, right? And a lot of investors are more cognizant of this narrative and theme. And obviously, if we can find alternatives and create innovation to have exposure to these niche markets, but at the same time protecting the planet, I think that's a win-win for everybody.
What I also love about this part of the sector is these are very much revenue-based models. They're investing in these companies. They have to develop their products. They have to do their marketing. They have to get into the stores. And then it's very much revenue-based. I think it's kind of a neat opportunity for investors, don't you think?
Yeah, absolutely.
Yeah. Okay, let's talk about next week. There's a lot going on next week. Jordan, so why don't you break it down for us?
Yeah, from a market perspective, obviously we're watching market breadth. We want to see improvement. We want to see a breakout and confirmation in the small to mid caps. As I mentioned, it's been range bound the last 7 months. We're starting to see some subtle signs of improvement, but that in itself will be a catalyst for the equity markets. Q4 in particular, from a seasonality perspective, is very strong for equity markets. In particular, the small to mid caps do very well in November in particular. So obviously that's something we're watching very closely. But also from an economic perspective, the US LEI index, they're going to release August or data from last month next week as well. That hit all-time highs last month, so we'll see if there's some follow-through there. And then domestically here in Canada on Monday, we have the Canadian election. So we'll see what the aftermath is as a result of that, and see what happens.
I do have to say, as far as the election is concerned, I think this time around is more important than ever for everyone to go out and vote. Please, there's a lot going on in the world right now. There's a lot going on in Canada. everyone's opinion really, really matters for this to go forward. So I really encourage people to do it. I know it's scary with what's going on with COVID, but everyone do their part and go and vote if you can. The other thing I just want to mention is we have a new series coming from the CSE. It is Digital Securities in the Capital Markets. We are working on it. It will be live on October 6th. All the information can be found on our website. And we have a wonderful promo reel we're going to play right now for you. Make sure that you check it out. Thank you so much for joining me, Jordan. We'll see you, or not see you next week, but we'll see you soon, I hope.
Thank you for having me.
Welcome to Digital Securities in the Capital Markets, a special presentation of the Canadian Securities Exchange and its partners. Join us as we dive into the evolving world of digital securities, including new innovations in capital and debt financing, with an eye toward the critical themes of sustainability and regulation. We will also explore the intersection of digital assets and the world of art and entertainment, presenting a new era of opportunity for creators and investors alike. Where education meets opportunity, this is Digital Securities in the Capital Markets.